Hello everybody, I want to talk to y'all today about our closing entries from chapter 4. Really, this is the only new information, or the majority by far of the new information that we cover in chapter 4. Chapter 4 is kind of a summary of everything we've done in chapters 1 through 3, and it completes the closing process of our accounting cycle with our 4 closing entries. You will see up here I already have typed our 4 closing entries. Our first closing entry is always to close our revenue accounts into income summary. Now, income summary is a new account that we've never used before. It is what we call a summarizing account, and the only time you will see this is in closing entries. We don't even give it a classification like an asset, a liability. We don't even worry about it. It's just called a summarizing account. The purpose of closing our accounts is to make them have zero balances. When we do our financial statements, say my income statement particularly, for the year ended December 31st, 2013, I want to know what my net income was for the year of 2013. Or if I'm doing my income statement for a month, I want to know what my net income was for that month. That makes sense? And if my revenue accounts and my expense accounts, if those balances just continue to grow and grow and grow forever and ever and ever, then when I say revenues minus expenses to get net income, then that would not be telling me my net income for the month or the year. That would be telling me net income for however long I've been in business. If we never started these accounts over, then if I've been in business for 20 years and I did an income statement, my net income would be my net income for the past 20 years. So what's the problem with that? The problem with that is we need current information to make decisions. Remember, one of the main purposes of preparing all this accounting information, our financial statements, everything we do in accounting, is that managers, owners, CEOs, they use this information as a main part of the decision-making process. So I need up-to-date current information. How much revenue did I earn this year? What was my rent expense this year? How much money did I pay my employees, wages expense, this year? So even though it would be nice to know what is my cumulative net income for the past 20 years, doesn't really do me much good in the decision-making process. Because for all I know, maybe I was a very profitable business for the first 12 years, and then I've been doing really crappy, for lack of a better word, for the last 8 years. I need to know. I need more specific information. So that is where our closing entries come into play. We're going to make these accounts have zero balances, so they start over fresh for every accounting period. The accounts that we close are called temporary accounts. We close our revenue accounts, we close our expense accounts, we close income summary, and we close our drawing account. And actually I need to fix this. I'm having to get used to this new book. In this book they call it the withdrawals account. So we close our withdrawals account. So revenue accounts, expense accounts, income summary, and withdrawals. Those are the accounts that we close. What does that leave? That leaves us with assets, liabilities, and capital. We do not close those. Those are called our real accounts. Think about it like this. You've built up $70,000 in your cash account. Well, you don't want to make that be zero just because it's the last day of the year. You don't want to start over building up your cash. You want to keep it, right? I own a house. I don't want to go to bed on December 31st and wake up on January the 1st and be homeless because it's a new year. I want to keep my assets, right? Now, on the other hand, if I could charge up a whole bunch of debt, go shopping a lot, and run up a bunch of credit card bills, and then go to sleep on December 31st, and wake up on January the 1st, and all my liabilities be gone, that would be awesome. Unfortunately, it doesn't work that way, right? Your creditors still expect to be paid, so our liabilities don't go away. Obviously, we would not want capital to go away. Capital represents the value of the business to us, the owner. So we do not close assets, liabilities, or capital. Okay, let me know if you have any questions about that. Our 4 closing entries, I kind of got sidetracked there after I said 5 minutes ago, our 4 closing entries. The first one is to close our revenue accounts. Revenue accounts normally have a credit balance, correct? I'm always pausing. I like to pause in these videos because I'm giving you a chance to kind of think about what I'm asking, kind of answer the question to yourself before I give you the answer. So they have credit balances, right? To get rid of a credit balance, you would debit it. Because remember, credits and debits are just pluses and minuses. So a debit to a revenue account would be a deduction. So we will debit all of our revenue accounts and credit income summary. So for example, let's say we had fees earned, and it had a balance of $500,000. And we have rent revenue, and it has a balance of $100,000. If we have 2 revenue accounts, we will debit them. We will credit income summary for the total. So my total will be how much? $600,000. So that would be an example of how we would do our first closing entry. Debit all your revenue accounts, credit income summary for the total. Entry number 2 is to close our expense accounts. Expense accounts normally have a debit balance. So to get rid of a debit, you would credit all of your expenses. So example, what would we do? We would debit income summary, but it is going to be for the total. So I don't know what that total is yet. So I'm going to come down here and I'm going to credit all of my expense accounts. Let's say that we have wages expense, and wages expense is $50,000. We have, let's see if I can magically line all these up. It'll be a miracle. We have advertising expense. I usually use an Excel spreadsheet, makes lining things up much easier, but that's not what I opened. Let's say advertising expense is $100,000, and we have, let's just say miscellaneous expense. Let's keep it simple. and miscellaneous expense is $50,000. I like nice even numbers, so I can do the math in my head real quickly here for y'all. All right. Put a little space there so we can see better. So if we add up all of our expenses, we're going to debit income summary for the total. So 50 plus 100 plus 50 gives us $200,000 for our debit. So debit income summary for the total of all of our expenses. So now, entry number 3, oops, I'm trying to pull this up so we can see everything on one page as we go. Okay. Entry number 3, we are closing our income summary account. We are not closing capital. Remember, capital never gets closed. We are closing income summary into capital. Well, to close an account, I have to know its balance. If we look in entry number 1, we credited income summary for the total of all our revenues. So the credit to income summary is our revenue total. In entry number 2, we debited income summary for the total of all of our expenses. So if I want to find the balance in an account, the balance is the difference between the debits and the credits, right? So the balance in this account is going to be $600,000 minus $200,000. Let's take it a step further, which I know mathematically equals $400,000, correct? But let's think about this. This credit equals total revenue. This debit equals total expenses. So really what I'm saying is revenues minus expenses. Does that sound familiar? It should. That's our income statement, right? Revenues minus expenses equal net income. Very good. So I'm basically calculating net income here. And the net income for this company would be $400,000. Does that make sense? Let me know if it doesn't. Okay. So to get rid of a credit balance of $400,000 in income summary, and we know it's a credit because the credit is the larger number, I would have to debit it. A debit would get rid of a credit. So I would come down here and I would debit income summary for $400,000 and I would credit the owner's capital account. Capital is increased by a credit. So I'm closing income summary, I am increasing capital. So I'm increasing the owner's capital account by the amount of net income. Think with me for a second. Chapter 4, it's very important that we begin to see the big picture, so to speak. All this stuff is kind of coming together in Chapter 4. Think about your statement of owner's equity. In our statement of owner's equity, we have beginning capital plus investments plus net income. This is where we are making that come true. Remember, the only way to make something actually happen in accounting is to make a journal entry and then post the journal entry. That's how account balances are affected. So we write it on the statement of owner's equity, but this closing entry, this is where we actually make that come true. We are increasing the owner's capital account by the amount of our net income. So think about that. Let me know if you Oops, didn't mean to do that. Ooh. Let me know if you have any questions. Okay. Our last closing entry is to close withdrawals. This is your entry. We're going to debit the owner's capital account, credit the owner's withdrawals account. The withdrawals account has a debit balance, so doing the opposite would make it go down to 0, so we're going to credit it. We will be reducing capital by the amount of the owner's withdrawals. So once again, think about your statement of owner's equity. On your statement of owner's equity, we add investments, add net income, subtract withdrawals to get ending capital. So we subtract withdrawals from capital on the statement of owner's equity. This is where we are making it come true. We are reducing capital by the amount of the owner's withdrawals. So let's just say the owner's withdrawal account has a balance of $6,000. Whoops. So debit capital and credit withdrawals. Did I spell that right? Yes. Oops. That, my friends, is your 4 closing entries. We close all of our revenue accounts, close all of your expense accounts, close income summary into capital, close withdrawals into capital. You will already have the balances of your revenue accounts. You will already have the balances of your expense accounts. You will already have the balance of your withdrawals account. The only number you have to calculate in a problem would possibly be the balance of income summary. However, you don't have to always calculate that, depending on the problem. If you have already done your income statement, you already know this number, don't you? Because we said this number is what? Net income. Revenues minus expenses. So in reality, closing entries are one of your final steps in the accounting cycle. You would have already completed your financial statements. You would already know what net income is. So you wouldn't have to calculate it. In a homework problem, you may not have already done that, so you might possibly have to calculate it. So we would just find the difference. We're finding the balance of income summary, but we know it represents net income. Any questions? Make sure in this chapter you are beginning to quote. If you could see me, you would see me putting my fingers up in the air, making the quotation marks. Make sure you're beginning to see the big picture. See how all this is coming together. The chapter talks about the steps in the accounting cycle, and it's basically everything we have done in our first 4 chapters. Everything from journalizing basic transactions, completing financial statements, preparing those trial balances, adjusting entries, closing entries. Everything we have done comes together. Okay? Please let me know if you have any questions. That's what I'm here for. Hope you are utilizing all your resources. Y'all please let me know. I keep posting this in announcements and on discussion boards. You know, if there's one particular thing you are having trouble with and you'd like to see more of a video on it or something I leave out of a video, I can sit down and make one. As y'all can see at the beginning of this one, I started talking about the entry up here and then I got distracted and talked about just the closing process in general. I just sit down and start talking, just like I walk into class and start talking. I have an idea of what I want to talk about, but it's not like I have a script. So if there's something else you want to see, just let me know. I can work out an example of a problem. I could work out another example of these. I need feedback from y'all. I do what over the years I have learned that people need help with, but maybe y'all's class is different. Maybe there's something y'all want help with that the other class didn't. So I just need to hear from you. I want y'all to succeed. If everybody had an A, nothing would make me happier. Just let me hear from you. Let me know what you need, okay? Hope you have a great day.